You don't have to borrow from the family. We've got options. Hey everybody, it's Ben here from JobNimbus with the Building Business channel, and I've got Brock from Lindio with me today.
Good to be here.
Super glad to have you.
Thank you.
I want to talk about lending in general because I think a lot of customers don't know when is the right time for me to maybe take on a loan for my business or to take on a loan to buy this piece of equipment that I need. When do you know it's the right time?
Well, let me first say the wrong time is when you absolutely desperately need the money.
Yeah, that's right. Never raise money when you need
That's
it.
usually the time when people are looking for a loan. And usually if you can come off your busy season, or you've had a big job, or you've got good cash flow, and you can leverage that and say, I'm going to have a little bit of foresight, and I know there's going to be a down season, or there's going to be, I've got a big job coming up, and if I can apply for a loan when I don't need it or before I need it, and so I'm not urgent, that's the best time where lenders and financial institutions will look at you and look at the health of your business and say, okay, this looks like a business owner that needs a loan, and I want to back them. If your back's against the wall and you're desperate for money, that's a tough spot, because now lenders are fearful that they won't get their money back. They won't get repaid on the loan.
Yeah, there's risk there.
Yep.
I think that's a really good point. Generally speaking, you want to raise money for growth and upside and positivity, not to save the company or just to make payroll or something like that.
Right, and sometimes there's situations you can't avoid it. You get stuck and you need to be able to get money and things like that. I think generally there's, when I think about lending, and for people who've never gone through the process of getting a loan, there's kind of three main things they need to think about.
Okay.
A lender will look at you through three eyes. One is through your cash flow, two is through any collateral you might have, and three is through your credit score. Now, if you can check all three boxes, you're likely to get a loan, and the perceived risk to the lender is very low, so you're probably going to get a lower rate. If you only check two of those boxes, you have good cash flow and good credit, you're still going to be able to get a loan. Medium risk, you'll probably get a medium rate, right? Mm-hmm. And then if you only check one of those three boxes, you can still get a loan, but your now perceived risk is higher, and so your rate is going to be higher. So when you're thinking about, okay, I need a loan, if I can show good cash flow, if my credit score is above average, if I have any collateral, they don't always take it, but an SBA loan, they'll usually look at some sort of collateral.
Yep.
And you're going to be able to get probably a pretty good option for you.
What about if you don't have credit as a business? Let's say you're kind of new and you don't have any business credit. What do they use instead in that case?
Yeah, so a lot of businesses don't have business credit, and that's okay. But a lot of times what they'll do is they'll look at your personal credit of the owner of the business.
So does that also include what's called a personal guarantee or something, where you actually, if you take on the loan for your company, but you're liable for it? Is that how it usually works?
Yeah, there's a lot of talk around these fears of personal guarantees, and I'm going to be liable for it. I mean, yes. The answer is yes, but most lenders nowadays, depending on what the loan size is, if it's a $20,000 or a $50,000 loan, they're going to try and do their best to collect it, but they're not going to come and try and take your house. It's too much work for them to be able to try and collect, your car you own or other things like that. And so I think that's more of the boogeyman than it is reality. But I don't want to portray that won't happen. Every lender's a little bit different, but 95% of the time, there isn't that type of recourse, unless the loan is, if it's $1 million loan, then
yeah, there's something there.
Could be, right?
Yeah. What about ratios? Is there a certain amount of money that's like, hey, look, you shouldn't be taking on more debt than sort of how much cash you have? Or is there any sort of rule of thumb there that people could use to know this is about the amount of money I'd max want to target?
That's really hard to say, because there are ratios in consumer loans, right? You think when you're getting a mortgage or an auto loan, they kind of say your mortgage and your auto loan, the combination, I think, shouldn't be higher than 40% of your income.
Of your total
something
income.
Like that. I can't remember the exact.
It's like 35, 40%.
Yeah. The difference with consumer and business is that with business, usually you're getting a loan for growth, meaning your income will likely grow. If I'm a consumer and I get a mortgage, that doesn't mean my income's going to grow. Like, my income is what it is, and it's going to stay flat. But a lot of businesses, you might take a high rate, high risk loan and be able to pay it back in 90 days. I've seen them so many times where they get a loan and it's like, okay, this is a high risk loan, right? But I was able to buy this piece of equipment, which allowed me to increase my monthly revenue by $5,000 a month or $10,000 a month or 50% or whatever the number is. And I can easily pay that loan back off in 90 days or 180 days, and I'm so much better off because of it. And so the risk profile is different, and it's not so much about your a ratio. It's more about the best decision is to say, can I get ROI from this loan? What's the ROI calculation? If I plug this in, what will my revenue increase to if I pay this off? And then once I pay it off, I'll have an increase in revenue that will benefit my business long term.
Okay. So you mentioned about preparation and thinking ahead. If you need the money, don't do it when you need it, do it ahead of time. So that seems like you'd want to be building relationships with lenders well ahead of when you actually needed the loan. Is that right? Yeah,
it never hurts to have a relationship with a banker. What we do at Lendio is we're a marketplace, and so you don't actually need the relationship. It's kind of like Expedia for hotels or Yelp for restaurants. Go to one place, we have 300 lenders, fill out the application, and then you can kind of comparison shop your rate and term and payment amount and things like that. And so, but I'm not going to say, like, if you have a relationship with your banker, start there. But if a lot of times there are a lot of different loan products, and a bank only offers one type of loan product. So you go talk to your banker and you say, I need a loan, and they're like, oh, I can't get the loan that you quite need, and so you walk away empty-handed. Where we have every loan product from lines of credit, term loans, equipment loans, real estate loans, SBA loans. And so we have a much broader view of what options you might have available to you.
So what are you supposed to have in place before you actually go and talk to a lender? I know there's usually a lot of documentation that's required to get a loan. What are some of the key things you should be prepping right now and really running your business on so you have those in place?
Yeah, so nowadays there's two different types of loan products that two buckets, I'd say.
Okay.
One bucket would be a cash flow term line of credit loan, and the documentation you really need is not very much, because really they're evaluating the cash flow in your bank account. They're going to look at over the last 3 to 6 months, and they're going to say what's your income, what's your average daily balance, do you have any negative days, and they're going to evaluate your cash flow and give you a loan based off of your cash flow. So they're going to pull credit, they're going to look at your cash flow, and then they're going to make a determination based off that.
Okay, that's for lines of credit.
That's those three products. The other group would be an asset-backed loan, which would be more like an SBA loan. It might be an equipment loan or other things like that. And in that case, a lot of times they'll look at a personal financial statement. So they're going to want to look at all of your income, any of your assets. They'll possibly want to look at 2 years of tax returns, not only on you but also the business. The SBA has a few other documents that aren't required to be prepared beforehand. But those tax returns and personal financial statements would probably be the other group of things that you could prepare beforehand.
Yeah, that's great. Those take a lot of time to put together if you're not actually diligent about doing them. So starting now and then running your business with those tools puts you in a much better place later. How long does it take to get money from when you want to get it until it's actually in the bank? What's the process there?
Yeah, so fortunately there are a lot of loan products now. There's been so much advancement in lending over the last 5 to 10 years that there's a lot of automated underwriting. And so when I talked about those two products, there's the cash flow products and then there's the asset-backed products. The cash flow products, you can get approved same day. You can get money in your account, within 48 hours.
Wow.
Now, that's not everyone does that. It happens it's efficient.
Yeah.
And now, if you're trying to get an SBA loan, if you're trying to get an equipment loan or real estate loan or things like that, there's a lot more work that has to be done, and they're evaluating your assets and your collateral, and just the SBA process it's archaic. Unfortunately, there's just not a way to accelerate
No,
that.
it's super slow. Yeah.
So that will probably kind of fastest time to funding. You're probably 3 to 4 weeks.
Yeah.
Probably on average, it's more like 6 weeks to
Yep.
get
A
one of those
couple
loans.
months I'd budget for probably.
Yep.
Thanks, Brock. Appreciate it. Okay, so you've got to plan ahead. Don't raise money when you need it. Raise ahead of time and plan ahead for that. You've got to have your ducks in a row, your documentation in place. And frankly, a marketplace like Lindio is a great area to go and actually find a lot of different loan products in one. All right, thanks everybody for joining us today. Super glad to have you back next week. Keep on building your business.